about Islamic economics, which is Islamic economic is an economic system.
Assalamualaikum and hello everyone. Today, our group will be expanding on Islamic versus conventional taxation concept.
So conventional taxation is a system where the government imposes compulsory tax on individuals and businesses. So examples include
Taxation is an important tool in managing country's economy. However, the approach and philosophy behind taxation is differ between Islamic and conventional economic system. In this video, we will further explain to you guys both concepts, simple scenario, and key differences.
Prof. Tina, can you explain what is conventional taxation?
Okay, thank you Azal for the question. So conventional taxation is a system where the government imposes compulsory tax on individuals and businesses. So the examples include income tax, corporate tax, sales tax, and value-added tax. So the whole reason, the main objective is to actually generate government revenue and also fund public services and regulate economic activities. So in this system, tax compliance is enforced by law, and failure to pay taxes can result in penalties or legal action.
Thank you, Prof. Tina.
Why is my salary lower this month?
It's because income tax has been deducted automatically.
Even though my expenses are high, am I still have to pay it?
Yep, it's compulsory under the conventional system.
This shows that conventional taxation is mandatory and based on government authority regardless of personal circumstances.
This slide compares conventional taxation and Islamic taxation based on two key aspects, which is obligation and the treatment of interest, also known as riba. First, in terms of obligation, conventional taxation is mandatory for all individuals or entities who meet the legal requirements set by the government, regardless of religion. Everyone who falls within the tax bracket is required to pay tax. In contrast, Islamic taxation, such as zakat, is mandatory only for eligible Muslims. It's applied only when a person's wealth reaches the nizab, which is the minimum wealth threshold set in Islamic law. Next, regarding the treatment of interest, or called as riba, conventional tax system allow interest-based income, which income earned from interest such as bank interest is considered lawful and is taxed like any other income. However, under Islamic taxation, interest-based income is not recognized because riba is prohibited in Islam. Therefore, Islamic taxation avoids taking income derived from interest and instead focus on ethical and Sharia compliant source of wealth. Overall, the main difference lies in the religious foundation of Islamic taxation, which emphasizes moral values, fairness, and social justice, while conventional taxation is based on secular legal frameworks.
Assalamualaikum.
Hello.
How much?
RM2. Right, thank you.
Kita sama-sama.
So, Islamic taxation is guided by Sharia principle and aims to achieve justice, fairness, and social welfare. Instead of relying mainly on taxes, Islam also emphasizes well-distribution mechanisms such as zakat, kharaj, jizya, and ushur. Zakat is an act of worship and becomes obligatory only when specific conditions such as nisab and haul are fulfilled. This slide will explain about zakat and kharaj, which is two instruments in Islamic economy. Both play an important role in ensuring economic justice, wealth distributions, and state sustainability within the Islamic economic system. Next is zakat. Zakat is a compulsory religious obligation for Muslims who meet the required wealth threshold. It is imposed on savings, income, and certain assets, commonly at a rate of 2.5%. The main objective of zakat is wealth purification and distributions, which help to ensure that wealth doesn't concentrate among the rich. Next is the purpose of zakat. Zakat is distributed only to specific groups known as asnaf, such as the poor, needy, and debtors. Through these mechanisms, zakat acts as a social safety net and promotes fairness in income distributions. Next is Kharaj. Kharaj is a land tax imposed mainly on agricultural land during the early Islamic period. It was applied especially to conquered lands and was payable regardless of the landowner's religion. Kharaj could be charged either as a percentage of output or as a fixed manual payment. In summary, Zakat and Kharaj serve different but complementary roles. Zakat focuses on social welfare and poverty reduction, while Kharaj support state revenue and public expenditure. Together, they reflect the Islamic economic goal of balancing social justice and effective governance.
My saving has reached nisab and I have kept them for 1 year.
Then zakat becomes wajib.
I'm willing to pay because zakat can provide my wealth and help those in need.
Okay.
This section looks at two main differences between conventional taxation and Islamic taxation, which are the objective of taxation and the basis of assessment. First, in terms of objective, conventional taxation mainly focuses on raising revenue to fund government spending and public services. In comparison, Islamic taxation places more emphasis on social justice, fair distribution of wealth, and the well-being of the society. The goal is not only to collect revenue, but also to reduce inequality. Moving on the basis of assessment, conventional taxation is usually based on income, consumption, or transaction regardless of how much wealth a person has. On the other hand, Islamic taxation is based on net wealth and productive assets that exceed a minimum threshold called nisab. This encourages people to circulate their wealth instead of keeping it idle.
This reflects how Islamic taxation combines economic responsibility with spiritual obligation.
To summarize, both systems aim to support society, but they differ in their foundation and objective. Conventional taxation is based on state authority and focus on generation of revenue. Islamic taxation, on the other hand, is rooted in divine guidance and emphasizes social justice and wealth purification. Ultimately, Islamic economics seek to achieve falah, which is success in both this world and hereafter. Thank you for watching.